Hey everybody, Coach Brown here. I wanted to run through 8 ways you can get into real estate investing or making money in real estate when you don't have much money. Maybe you have no money to invest, but a lot of enthusiasm. Maybe you have some money, but you don't think it's enough to really make a splash. Here's 8 techniques. They're tried and true. I've done most of them myself. Let's run through them. They're a good way to get you started in real estate investing with little or no money down. The first one is going to be house hacking. House hacking is going to replace where you rent or if you own a single family home. So you're going to move into a 2 to 4 unit property, or you're going to rent rooms within your single family home. What you're really doing is you're turning what's really a liability, a non-cash flowing property, into a cash flowing asset. Average American spends 20 to 49% of their income on housing. This is a good way to give yourself an immediate 20 to 49% raise. If you do it correctly, you can live for free, or you might even cash flow out of your property. In most markets, if you buy a 4-unit property, live in one, and then rent or Airbnb the other 3, you'll probably actually be making money in addition to living for free and enjoying appreciation. Also gives you a crash course in becoming a landlord or an Airbnb host or manager. Strongly recommend house hacking, probably the easiest way to get in. Why is it in the low to no money down category? You can buy a 2 to 4 unit property with VA or FHA or a 203K loan. You can look all those up online. These are very low money down. You can take seller credits or play with brokerage fees to possibly bridge the gap and have truly no money down. Let's move into number 2. Number 2 is you could partner. Partnering is a bit of a cheat code, as Pocky Judson says. Finding the right partner can give you mentorship, education, capital. It can set you up forever. The trick is, if you're going to be the guy with no money in the partner deal, you need to bring something to the table. Probably need to be able to find deals and manage projects. Possibly marketing, but finding deals and managing projects are critical. And people will pay you well for that. If you brought me a good deal and had no money and you brought it to me, if it was good enough, we might split it if you're willing to manage the project all the way through. So partnership is a great way to get in, and you get mentorship out of it if it's a good partner. So number 2 is partnership. Number 3, private or hard money loans. Private money loans and hard money loans are high leverage, but they can often be worth it. If you're doing a deal where you're going to be doubling your money in 90 days or 6 months or a year, it's not that intimidating to take a loan at double digits. It might be a 10% loan with some origination points. You might be able to do better than that, but hard and private money loans, you can usually get 90% loan to value, so 90% of your purchase plus your rehab costs. So you might be able to do a project that you think is going to take you hundreds of thousands of dollars. You might be able to do $1 million project for $100,000 down, bring in a partner. You might be able to do a smaller deal, like a $100,000 deal. You might only need 10 grand, maybe a little more reserve. So I do recommend private and hard money loans. It might save you additional partners as well that could just dilute your earnings later. So I recommend them. The lease option. The lease option is not talked about as much. I like the lease option because you can get into a property with no money down, just sign that lease. The option is an option to purchase. So you're gonna wanna have an option to purchase with a set purchase price. Don't just say I have an option to purchase at time period X. Say I have an option to purchase for $300,000 with terms. And so when you do a lease option, the home run is to lease a property, residential or commercial, improve it, and increase the value. Then when you go to exercise the option and buy the property, you've increased the value. You might be able to get a lender to give you all of that option price because you've increased the value well beyond what the option price is. So the loan to value covers the entire purchase. It's an interesting way. It's pretty common in commercial, hotel, motel. I see it a lot. So think about it. Number 5 is seller financing. Seller financing isn't the easiest thing to find right now, but it's still out there. And if you look at guys like Pace More being subject to, there's some creative finance, seller financing type worlds where you essentially assume or take over someone's mortgage. What I'm talking about here is a little different. This would be a property that's free and clear, and the seller's willing to be the bank, sell you the property, transfer the title in your name, and hold a mortgage. I personally did this on the deal last summer, and that new owner's been paying me every month interest-only payments, and they have to pay me off in full in another year. But as you go looking for deals, you might be able to find someone seller financing at below market rates. So at the time of this recording, if somebody would seller finance you like on a rental property at 5% or less, that would be a win. And they might do interest only because they might not care about the amortization. They just want, the interest payment. So I would recommend seller financing, try and get some interest only in there as well, and just use it as a bridge of sorts. You can hang on to that loan, or you could go ahead and use it and sell later. But they might take 5% down, 10% down, no money down. So you can get as creative as you want with seller financing. Number 6 is wholesaling. Wholesaling is not necessarily investing, it's more like brokerage, but why I put it up here is it's a way to get real estate related income without money down. So wholesaling is going to be assigning a purchase contract for a fee. So I put a property under contract as an investor, and then I sell that contract for a fee to another investor. That piece in between is the wholesale fee. It does get you good at finding deals, networking with buyers and other wholesalers and agents, and learning how to write offers and negotiate. So I still put it up here as it's a quasi investment pursuit, but I think it's a worthwhile one. All right, number 7 is syndication. The syndication, when I put it up here with no money down or little money down, I mean that you're the sponsor or you're the general partner. If you are a limited partner in a syndication, you are quite literally just placing your money in a deal for passive income. This is the other side of the deal. The general partner or sponsor finds the deal, they're the operator, they're the ones going out and finding limited partners who are the actual humans or entities that are investing in your deal. So this would not be something you start with, but if you get good at finding deals and you have a lot of investors in your Rolodex, syndication could be a way to get into large real estate without any significant money out of your pocket. Number 8 is good old BRRRR. Buy, rehab, rent, refi, repeat. I'll say it again, buy, rehab, rent, refi, repeat. This has become very popular. It's always been popular, it just wasn't called BRRRR. So that means you found a property, you improved it, you put a tenant in place, you went to a bank and refied, and now you got all your money back or most of your money back. You take those proceeds and go into another deal. So it's a way to platform or mushroom your growth through buying, rehab, rent, refi, repeat. Spin on that is called the BRRRR Stir. So at the end, you would do a short-term rental like Airbnb or VRBO instead of a traditional rental. Same process, only now your income is even higher at the rental point. So you might get a better refi or better cash flow to where you can grow a little faster. So these are the primary 8 ways to get into real estate with little or no money. Some you can do with no money, some you just need a little bit of money, but bear in mind, if you just find a good partner or a good seller finance deal, make some money through wholesaling, you need to eliminate your housing costs through house hacking, finding good partners. Even if you have a lot of money, good partners are great. They can complement your weaknesses. And you always want to have hard and private money lenders because a lot of the investment deals, they're not going to be bankable with a traditional bank. It won't be the bank that you go get like your traditional home mortgage from. These will be different lenders, non-qualified mortgage lenders. You just got to have them to scale. I hope all this was helpful. Make sure you hit us up with a DM or a message. You can text 904-570-8837, or you can email me at ian@yield-coach.com. Love to hear from you. We can talk through any of these in more detail. All right, guys, as always, lace up and leave it all in the field.